So thank you all. Looking forward to this next discussion. What do global investors think about during a trade war? Actually grows out of a conversation that I had at the Pacific Pension and Investment Institute last summer, where the global investors asked some trade experts to come in and tell them what was happening in trade. And Lionel Johnson and I started talking about, well, not what do the trade people tell them about what's happening in trade, but we wanted to hear what the investors think about trade. And that was the genesis of this conversation we're having here today. Very grateful to my old friend Lionel Johnson for joining us today, and our other two panelists for coming in from out of town to be here today to discuss how the world is looking at what we're doing here in the United States and what's happening around the world. With that, I'm going to turn it over to my good friend Lionel Johnson.
Thank you, Ken. I appreciate it. And I want to thank WITA for giving us this opportunity this afternoon to be with you. As Ken said, I lead the Pacific Pension and Investment Institute in San Francisco, which is a membership organization of global institutional investors. Our programmatic focuses on the Pacific Rim and opportunities in that geography, but our members span the four corners of the globe. I just returned in that vein from a 3-week trip around the world, mostly in Europe and all over Asia. During a period, I actually met with the leadership of many institutions that are members of ours, but also with central bankers. And the members of the international sort of institutional investment community that we have in our organization have investments not only globally, but heavily concentrated here in the United States. And I think a lot of people don't often realize that institutional investors from around the world are invested in our states. And we can talk a little bit about Virginia. All of them expressed to me great concern about the implications of heightened trade tensions on the long-term outlook for investment environment here in the U.S. And they're growing concerned about at least the perception that the United States has moved and is moving away from its previous and longstanding commitments to the rules-based global trading system. I thought that we would take the request from Ken and take a different tack here and look at the appreciation that investors have of the opportunities in this market, but also on a global basis. And I think we have the great fortune of having two speakers who can really contribute to that very richly. Dr. Maria Vassalou is a member of PPI, but she's the partner in Perella Weinberg Partners asset management business. And Hampton Dowling serves as managing partner of the HBC Group, and he's also the chairman of the Virginia Commission on International Trade, the Committee on International Trade. So I'd like to just kick this off, and I'll ask each of you to respond. But first, Maria, the IMF last week said that the expectation now is that global expansion is weakening and that there is a greater risk that we will have more significant downward corrections over the next couple of months. Do you believe that the financial markets and these trade tensions have become now more intertwined and that they are tightening the financial conditions and escalating risks to global growth?
Yes, first of all, Lionel, thank you very much for inviting me to this conference. Great honor to be among you and be able to contribute to this discussion. In terms of how financial markets are looking at this trade disputes or trade wars that are going on, financial markets don't like uncertainty. So the main problem with what is currently happening is that it contributes to uncertainty. And when there is heightened uncertainty in the markets, then decision makers hold off on making decisions, and so investments that could promote further expansion or growth in particular industries are put on hold. So that's the main issue, and also because for most of the financial professionals that are active right now, this situation of having this level of trade disputes is not something they have experienced in their careers. It's something that they don't necessarily know how to handle. And so that increased the level of uncertainty that gets injected in their decision making. But it's not only trade. There are a lot of other things that are happening at the same time, and they affect each other. So we have also withdrawal of monetary policy accommodation from the Fed at a time of increased downside risk from the trade disputes. We have increased uncertainty in Europe because of what's happening to parts of Europe with Brexit, but also with Italy, with a slowdown in Germany and so on. So there are a number of things that are going on that are already adding to the risk of growth going forward. And at the same time, we have this dispute on trade, which at least in the short to medium run, can negatively affect trade growth.
Right, and trade.
Agree.
Hampton, how does this impact your work in terms of advisory of your clients, but also your work of the Trade Committee?
Well, I answer your question through three ways. One, I have my own consultancy, and I represent U.S. mid-sized companies with potential foreign partners. And my practice areas from Central Asia through the Black Sea region, North Africa, and then down into Panama, Colombia, and Latin America. I'm the editorial director of Latin America's largest logistics and trade magazine, and I'm also the chairman of Virginia's International Trade Committee. Although I can't speak for the governor and for the state and everybody as a chairman of the committee, it does provide some insights. I have a very contrarian view from what we listened to from the media panel that was here. What I've experienced from in 2018, talking to 5 presidents at the ministerial level, all the way through North Africa and running a magazine, is that there's a very positive view about what is going on right now. It wasn't that way initially. But when you talk to mid-sized companies, they make a comparison about where they were and where they are right now, and what is the outlook going forward. And they're becoming much better educated about why certain problems have existed and why they're learning about it right now. The issues that we're talking about right now. Why we're having this trade problem and trade war with China. What are the issues that have evolved? And mid-sized companies look back and they say, 2 years ago, where were we? 2 years ago was the lowest trade volume in recorded history. I remember standing on the wharfs in Seattle, and there were no containers there. 14% of the world's entire shipping fleet was laid up. That was unheard of. We were breaking down ships that were only 7 or 8 years old because it was cheaper to get rid of them than it was to own them. So where are we today? I mean, and 2 years ago, we had more bank closures than in history. We had more armed conflict in the world than we ever had in history, from the Moroccan border all the way around to Afghanistan plus the Philippines. Things have dramatically changed. 64% of the U.S. workforce is no longer outside the workforce. Gasoline prices aren't $3.20 a gallon. If you get outside of Northern Virginia a little bit, the price gets down to about $1.68 a gallon. Things have changed from a mid-sized company's perspective. But there is a lot of uncertainty. We have companies in Virginia that have been new to exporting, but they're holding off because of the uncertainty. If you don't know what the rules are, then you're going to be very hesitant to play. As far as China's concerned, we're the number one exporter. We provide the greatest volume of soybeans to China. So when that tariff came, it hit Virginia very hard. And so as a state, we had to move very aggressively to try and manage that problem. And obviously other customers came into play. But over the course of time, we end up about a month from now, the keynote speaker at our governor's trade conference down in Richmond will be China's ambassador to the United States, because we've sort of righted that ship and that problem. I guess the point is that there is a lot of uncertainty, but I've found that governments outside the U.S., from Central Asia down to Central America, Latin America, they've taken time to become better educated. Not everybody knows what a tariff is, but they've come to understand that it's a tool, not necessarily a permanent condition. And they look at where they were and where they are now, and what are the potentials going forward. And by and large, it's positive, but there is some cautionary hesitance. But I think there is a willingness to give this, our FTR a long leash in order to achieve some objectives, even though not all the meetings are in public. I had the president of a Central Asian company make a point to me. He said, I walked in, I was representing another company, and he said, well, at least you all are learning how to not to wear your strategies on your sleeve, which kind of goes to the point during the reporters meeting panel, which is not everything's open to the public. That's because we're negotiating.
Right.
So things are sort of changing. But stressing geography, becoming more aware of what is going on in order to make value decisions and strategies. We have a much more enlightened C-suite level senior management team, certainly at the mid-sized companies, than we did 2 years ago.
You both advise global institutions, global clients, as well as those operating here and being in the U.S. How do you, in doing so, factor in political pronouncements and policy making by tweet? How do you manage to advise them, Maria? When you think about 2019 and looking beyond sort of where we are today, the next several months, how do you help them navigate the policymaking process as it is here in the United States?
Well, political pronouncements include a lot of noise. So the art here is to separate the signal from the noise. And I think in the near past we had a large degree of noise combined with some signals. So I think what the markets at the beginning, with the current administration, there were a lot of statements made that caught the attention of the markets. The markets temporarily reacted quite significantly to those. As you see over time, the reactions of the markets are much more muted because they got conditioned to, the style of this administration, and so they are a little bit less reactive to what happens. In general, a political pronouncement, unless it's something drastic, does not necessarily immediately translate to something that affects the financial markets. The way to think about it is that for something to affect the financial markets, it first has to affect GDP growth and inflation dynamics. And the question is, what someone has to ask to themselves is this particular pronouncement going to affect growth? Is it going to affect inflation? And in what time period? If it is something that can potentially affect growth in 3 years or 5 years down the road, that's not going to be something that will affect the markets now, because the markets react to things that happen over the next 6 to 12 months. So if it is something long term, you're not going to see much of a reaction. On the other hand, if you have the Fed saying we're raising interest rates unexpectedly, or we decided to pause, that has an immediate effect.
Right.
And so you will see much more reaction.
Right. How about for you?
Well, it's amazing as you leave Washington, the frame of reference changes rather rapidly. We tend to be very policy oriented here in Washington.
Yes.
You sort of get a little bit further away and certainly go into other states. People look at it as, well, okay, what does this really mean for me? Is it really changing my business? People kind of look at a lot of the news that comes out of Washington, a lot of the tweets and a lot of sound bites, and a lot of it it doesn't stitch, it doesn't stick. What matters is, do we have changes in our tax laws? Mm-hmm. Is there a change in legislation? Where is that, and how does it affect my business strategy? So the hour-by-hour, day-by-day changes that come out of Washington don't necessarily always resonate with businesses. It has to be something far more substantive. And again, I mean, you're looking at companies that are not probably in the Fortune 50 or Fortune 75, where it's a lot of linkages and so forth and things to be concerned about. But other countries, other companies, and certainly countries outside the U.S., they want to look at substantive messages. And then they balance that across other things that they're saying.
Right. Well, in that vein, the U.S., with the exception of the Secretary of State, was not very present in Davos. And so we didn't have the benefit of having a clearer set of policy pronouncements from the typical U.S. interventions in that setting. But I can't help but think that a lot of the commentary out of Davos in the last week or so is pretty sour, not particularly optimistic. And I wonder, one of the points that was made by a couple of the speakers is that we seem to be having an unwinding of globalization and a move perhaps toward regionalization. And I wonder if you could comment on that.
Yes, this is a topic that I have spent a lot of time thinking about.
That's why I asked you.
And thank you. Well, as you all know, globalization took off around 2000, and it evolved a lot. But what we know now is that if you look at global GDP, globalization was positive for growth of global GDP, but the benefits of globalization were not evenly distributed. And so one of the issues we have is that globalization has an effect on global growth, but because it creates this regional imbalances, and we don't have a global government that will redistribute the wealth in a way that eliminates these imbalances, you actually but instead you have local governments, you start having this discontent that has emerged over the last several years, and that has also led to certain, extreme behaviors in certain parts of the world. Now, when we look at globalization and the effects of trade, a lot of the discussion that I hear in the media is about whether trade is good or bad. And I think this is the wrong way to look at it. It's not a matter of whether trade is good or bad. Trade, obviously, it's good, and it's something that existed since antiquity. The question is, how do you devise trade rules or trade policies that optimize the growth path of GDP over time and has minimal or positive social effects. And, we talk a lot about jobs creation, and there was also a topic that came out in the previous panel. As you've seen the data in the past several years, our country creates a lot of jobs. The problem we have is that these jobs are not highly paid. So if you look at the wage growth, that has been very anemic. And if you look at what drives wage growth, well, what drives wage growth is total factor productivity, so labor productivity. And one of the issues that you see in academic literature when you look at development and growth and globalization in total factor productivity and wages, you see that as globalization has increased, total factor productivity and labor productivity has decreased. And that's the main reason why you don't see wage growth. And so why is that? Well, there are two side effects of international trade that any policy, in my view, or any renegotiation of policy has to focus on. One is to preserve industrial diversity. So we do want to trade, but we still want to have an economy with a well-diversified industrial base. And that's not very different from looking at your portfolio of stocks. If you hold one stock in your portfolio, something happens to that stock. You have a lot of volatility in your portfolio. If you hold a well-diversified portfolio of stocks, then the volatility of your portfolio will be much more muted. The same happens with economies, and we've seen the financial crisis, during the financial crisis, that countries that had a much more diversified industrial base were able to deal with the financial crisis better and emerge out of it faster, whereas countries that were much more specialized, which is the main effect of free trade that forces the countries to be specialized, had much more trouble to emerge from that. Right. So we do want to trade, but we still want to preserve our industrial diversity. The second thing is that we have, if you look at a trade balance, obviously we have a goods deficit in this country, but we have a services surplus. And in the past, generally, this surplus was coming from IP royalties. But in the recent years, these IP royalties have been trending down. Some of it may be due to inversions and tax laws, but I think it's a much more general issue. And so, we do want to remain leaders in intellectual property development and research and innovation. But to do that effectively, what research has shown is that the spillover effects of this activity is very important. And so if you take a production line and you move certain parts of this production to different parts of the world, you minimize potentially the spillovers. And how do you decide what you should move abroad and what you shouldn't? It has to do with whether they share similar technology, whether they share the same labor pool, and so on and so forth. And so when we look at how to renegotiate, we should take these things into account because that's going to affect long-term growth. So it's not just looking at jobs, whether jobs will be created now or jobs will be destroyed now, because this is the short-term effect.
Right.
Where we should really, in policy sphere, we should look at the medium to long term.
Thank you. Hampton, when you are in your role as chairman of the Committee for International Trade, how do you talk about globalization in your committee, within your committee, the members I gather who are from around the state, and how do you engage your citizenry in discussions about the importance of continued international investment in the United States, but also U.S. investment internationally? How do you talk about this?
Well, we don't really discuss it in terms of globalization. Again, it kind of, as you leave Washington, you get into state-level government and companies. They're looking at increasing or at least sustaining their market share.
Right.
They want to know what is it? How can I begin to trade? How can I? What are the different options, the tools that can increase my ability to export? They're all about wanting to expand where they are. We're really focused, as a number of states, but the Commonwealth is focused on business attraction. Our economy is getting better. As I've had a number of companies tell me, either in the U.S. or ministers abroad, he says, there's nothing wrong with being an American. There's nothing wrong with actually winning and having a great economy. He said, you don't need to apologize for that. He says, what you could do is optimize that. And, in Virginia, we have, I think, one of the lowest unemployment rates, because we're seeing a lot of internal growth, a lot of economic development. But we have a lot of companies that want to export.
Right.
And, we're trying to evaluate what are the rules. How do we go about doing that? So we have a lot of other governments coming into Virginia, talking to us. Foreign governments are approaching states. There is a real thrust of foreign governments coming into the states to understand, how do states approach trade? How do states manage their economies? Because other countries view us as as an economic engine. There is a lot of opportunity here that didn't exist maybe even 2 years ago.
Right.
So as a committee, we bring companies in. We want to understand what are their goals and objectives, what are the tools that we can offer them as the Commonwealth, but also then how can we better represent their value when the governor goes abroad. Right. So companies they're uncertain about how to make investments abroad. They know they have to, but fortunately they know they can make investments here in the U.S., which they weren't able to do that long ago. So although we do have some ongoing trade disputes, there are barriers and there are tariffs, is largely focused between the U.S. and China. The rest of the world's doing pretty well, right. And our companies are doing pretty well. And although China is our second largest destination for exports. I mean, it did affect Virginia, but we have a lot of other things that are going on, and along with other states. I mean, when USMCA was signed, it was noteworthy that I think there were 14 other states present when that document was signed down south. So states are becoming very active in how to promote their company, their companies.
States, yeah.
And Virginia is certainly, we have the leading export training, export type of program to help our companies grow abroad. And a lot of states come to us. But make no mistake about it, there is a much more positive view about the role of the U.S., U.S. economy, and what we're able to do abroad. It's really changed the past 12 to 18 months.
Well, I think you're right about the activity level of among the states, not only in California where I now live, but I was at the State Department yesterday and they're preparing for 2 missions. Secretary Pompeo is actually doing a day-long conference in Kansas City on international trade, which is kind of interesting. But also...
businesses want it. They really want it. They see Washington as very focused on what Washington does.
Right.
And it's appropriate. Things are changing. It needs to change. And companies recognize the WTO changes. I think the feedback that I get, certainly from in my role as a magazine editorial director in Latin America, is they recognize that the U.S. is taking a very sort of a contrarian perspective than what you introduced earlier, was a very looking at managed rules-based trade, wanting to bring that back, bring some rigor back to rules-based trade rather than what we've experienced so far that got us to where we are today.
Right.
I think this is a great time to be in business, but you have to pay attention as you brought out. Otherwise, you'll miss it.
Before we turn to the audience, I would like to just maybe close this conversation just to go back to the point that you made earlier, Maria, about the importance of investor confidence and certainty, relative certainty in an investment environment. If you could make one recommendation to policymakers here in that area in terms of certainty, I'll ask both of you to respond to this, but what would that be?
I think less is more in a way. I think when you negotiate, you should keep your cards to yourself. I don't think a lot of things should be said. I think what the policymakers should reassure the public that they're working working to maximize the benefits for the country. They're very much focused on promoting long-term growth and prosperity in the country, and we remain part of the international community and a big player in international affairs, and then conduct their negotiations and then announce things once they're finalized, rather than having this piecemeal announcements that are not necessarily holding water, and they just create uncertainty and concerns in the markets.
Hampton?
I agree with that. When you negotiate, you don't lay everything out on the table. You don't have great dinners. You don't have big productions. When you negotiate on behalf of the United States, that's 300 million people. That's what is it, a $24 trillion economy? You're negotiating for the economic engine of the planet, at least certainly almost 25% of the world's economy. So you can't afford to make mistakes. One word from the wrong person affects markets dramatically.
Right.
But I agree with Maria. Less is best. The expectations of many foreign governments is not to have a daily dispatch coming out of the Foreign Trade Representative's office. They don't expect to walk into his office to get an upbrief about what's going on. I think the Secretary of State is doing well by going to Kansas City. I think more of that would be good. But I think if I had to make one recommendation, and to close on what I just said, I do notice a lot of the State Department and Commerce Department spending a lot of time in what we would call kind of secondary, tertiary governments, telling them what we're doing, because there's a lot of personal relationships involved, especially between our administration and those governments. They're all based in business relationships before. I think the one thing that I would recommend is more business council discussions, where you bring in business, either Fortune 50, Fortune 250, segments thereof, and have a day or two of meetings to explain exactly what is the path that we're taking in general terms. Give them a sense of confidence, because they're the ones that have to go back and brief their shareholders.
Right.
Because in the end, those shareholders, they're the ones that drive decisions in the business level.
Great. Thank you. Thank you both. Why don't we open it up to the audience and see if you'd like to pose some questions to our panel.
That's overwhelming.
It is overwhelming.
Also late in the day.
It is late in the day. No one? How about, what about the sort of the non sort of U.S. conversation? What worries you about the future of the European Union as an investor?
Well, you have, there are a couple of things. Since the financial crisis, both Europe to a large extent and China were focused on exports, and this slowed down. So it effectively affected the economic machines in both countries that were actually disguising a lot of underlying problems. And so since this level of exports have gone down, other issues have come to the surface. And so we see that China has been having growth issues for a number of years. They've been trying to deal with by promoting internal consumption, which goes against their traditional business model, which was to produce cheaply. And so now they're moving towards higher value-added goods and restructuring their production structure. But that has led to a slower growth. And now at the same time we have this trade war, so to speak, with China that further adds to the slowdown for them. In Europe, the problem has to do more with the dissimilarity of the countries that share the same currency. And under a constrained monetary policy and also fiscal policy, because this monetary policy puts a lot of constraints on deficits they can run, levels of debt they can run, and so on, it's very hard to rebalance those economies to bring them to a state where a common currency and a common monetary policy can work for all. And so I think it's a long-term issue, and it will lead to a low growth in the continent for a number of years. And that obviously weighs on global growth. So what we see about global growth, or the pronouncement about a slowdown, it's not just the trade war, is that's another nail to the coffin, I think.
Right. Hampton, what are you seeing?
Well, for Virginia, the EU is a very significant trading partner. Most of our higher technology, or higher end products are exported there. Generally speaking, companies are very supportive of Brexit. They kind of see the UK as being an extraordinarily high-end trading partner.
That's interesting.
I've noticed that comment coming out of conversations in Central Asia. A number of comments are, if I'm in Central Asia, I get comments about Panama. What is the level of investment of China in Panama? Do you understand that they own the major infrastructure at both ends of the Panama Canal? Is the U.S. dollar going to remain the currency of Panama? Where is that going? Because in Latin America, China is the leading investor, by high margin. There are concerns by some of our companies that are in the defense and defense-related services and do logistics, is the expansion of China into the South China Sea, the reclamation of islands, the creation of islands, because there is an interruption of trade lanes. And what is that going to mean 2 or 3 years from now? I mean, you just came from the Philippines. I deal with a company that's trying to be represented in the Philippines, that sat down with the trade minister of the Philippines, and there is some concerns about they're looking at the geography of the world and looking at the influence of China, influence of Russia, and what does that mean for trade, and how is that influencing the trade agreements? I mean, it doesn't escape anybody that the U.S. China trade agreement has a lot to do with what we're doing with North Korea. It has a lot to do with our discussions with China. It has a lot to do with what we're doing with with the EU. Everything is very much connected. I've had a lot of people repeat to me the theories that Kissinger gave a long time ago that said, before you do anything, before you speak, before you engage on any issue, go back and read the definition of and understand what are the linkages associated with the subject matter that you're about ready to discuss. And after about 2 weeks of thinking through that and understanding it better, then engage in negotiation and trying to figure out the answer to your question. And mid-sized companies in Virginia and elsewhere are getting smart. They're looking at geography. I've had a couple CEOs stand in front of me and get in front of a world map, and they give me their explanation of geography, the way the world turns, logistics, and what other countries are doing. So, and that wasn't the case 2 years ago. So I think we have a much smarter C-suite that is, again, not to be repetitive, but is willing to give this administration a longer leash, betting on that not only are we better off than we were before, but maybe knowing that the warts that have been revealed in trade practices will get resolved. Certainly, if you look at the 14 to the 34 chapters that have been certainly in discussion, you'll see that there's a lot of forward thinking that's involved. And industry is very supportive of that. At least I have found that to be the case.
Anyone in the audience? I can keep going, but I have just one final question I can ask you. I noticed something this morning that was interesting to me. Janet Yellen last month warned that corporate indebtedness is now quite high here. And if something else happens that causes a downturn, these high levels of corporate leverage could perhaps prolong these downturns. And I wonder, how are multinational companies with extensive global footprints going to sort of navigate all of these uncertainties, and what impact might that high debt that they're carrying have?
Well, there are various things. First of all, yes, certain segments of companies have high debt, but the others also sit on a lot of cash. So this is very mixed. If I'm worried about, it's actually consumer debt more than corporate debt.
Right.
And when you look at on that side, when we're leading to the financial crisis, it was the subprime that got everything unraveled. Now, if you look at total consumer debt, the mortgages is slightly smaller proportion than it used to be before the financial crisis, but credit card debt, student loans and auto loans have gone up a lot. So if you look at the total consumer debt is much higher. And at the same time, when you look at the consumption levels of households, that has remained the same. So what exactly has happened is that consumers and households have been financing their consumption through increased leverage, so increased debt. And that has to do with the fact that wages haven't grown. We have this, on average, small proportion of the population earning high returns on their labor, and a vast proportion of the population earning low returns on labor. And they see more and more pressure. So to maintain their level of consumption, they increase their borrowing. So the tricky thing with that is that as the Fed raises interest rates, it makes it harder for these households to roll over their debt and continue to finance their consumption this way. So the irony here is that if you want to have this level of globalization that we've been having that creates these disparities and puts downward pressures on wages, then in order to balance it out, you either have to do a much smarter, social and trade policy and growth policy, or you have to maintain lower interest rates and allow a higher level of leverage in the economy as a whole to be able to deal with this issue. And this is really what has been happening. And so as the Fed keeps raising interest rates, we're going to see a lot of problems going forward. And I don't think that it's realistic to go back to pre-crisis levels of Fed balance sheet or levels of interest rates that we've seen before.
I think the companies that I represent, they have cash to invest, but they're uncertain about where to make that investment. Again, it goes back to if you don't know what the rules are, how are you really going to play? There are a lot of countries that we don't think about every day that are very anxious to invest more in the United States, but they're sort of waiting to see what happens. There's not a lack of resources available to make some investments. There are resources to pay down some significant debt, but then of course, is that really where I want to put my money, or do I want to make some investments in infrastructure if I know certain things are going to happen? I think companies, at least those, just listening to comments made by companies that are in Texas, Idaho, Kentucky, and Tennessee, some of those that are in public meetings, they have money to invest. They look to the states for programs from some ideas about where to make some investments. They're anxious about foreign direct investments and partnerships. They're anxious to create some of these relationships where they can build infrastructure. They're waiting for the U.S.'s infrastructure plan.
Right.
I think the one thing that strikes me is that listening to a lot of the comments on the panels today is there's this sense that we're kind of doing the wrong thing. We're not doing it fast enough. I'm not really sure I know everything the administration's doing, but this is what they should do. This is what they're not doing right. These discussions are always very helpful. But with respect to U.S. China, you understand, they have a very steady course and speed. Their plan is very long term. Our plans change with election cycles.
Right.
12, 24 months.
Right.
What's our discussion going to be here 24 months from now? So what's really struck the world, global trading community is you have one individual who just happens to be running the world's largest economy that said, I don't like the way it was. And here are some changes that I'm going to make. And I'm actually not going to negotiate in public. And by the way, I can't do this unless my own economy is better, unless my military is better, unless I really put in place and optimize linkages that heretofore have been ignored. I'm sort of simplifying it, and it may not necessarily be completely correct. But, we have to appreciate the fact that the country on the other side of the table has a much longer term view.
Right.
They just landed on the backside of the moon. It gets very little coverage. They've announced that they want to have a space base at 2030, and yet they have an entire scientific community dedicated to that. And where's a lot of their artificial intelligence going? A lot of companies didn't even know what artificial intelligence was 2 years ago. And they're really struck that the U.S. isn't leading that charge. Right. It's amazing what U.S. companies are learning. They're very surprised that we just somehow aren't on top of all this. And they're really wondering how to get back in the game. So you're right, we are producing jobs that are not really, they're service-oriented, they're at the lower end. And companies are wondering why. Now, for a number of years, there wasn't a lot of money to be had to make these investments. There wasn't a lot of public policy that actually endorsed that. So hence, compounded by sequestration, which hurt Virginia quite a bit, they looked for international arrangements, international agreements to supplement their revenue and profit. But now they're turning inside the United States, want to make some investments in order to have higher-end manufacturing, higher-end services, higher-end research and development, sort of they create those higher-end jobs. But that takes time. It's not going to happen overnight.
Right.
But U.S. industry, at least those that I speak to, and certainly some foreign presidents and ministers who are educated in the U.S., are kind of having these very Denny's-level conversations about, well, these are the things we need to do, and it's going to take about 2 or 3 years to do it. It's kind of where they're going. There was a comment made earlier about you can't have a 40-year strategy. I agree with that. Companies today are looking at, maybe 4 years is really a long-range strategy.
Right.
Please, go ahead. Yeah, and just to add what Dowling said, it's not just that China has a long-term program. They also have a society where people don't strike, they don't criticize, they don't do any of these things. And so they can really implement, and they can direct them in what to study and what research to do. And so there is this central planning, which in this particular juncture works to its favor.
Right.
I was at a conference, or rather a roundtable, in the summer, and there was a senior executive from one of the leading Silicon Valley firms, and said that, in the past, the U.S. was way ahead in technology relative to China. Nowadays, he thinks we're hardly a year ahead.
Right.
And so that's really what we should be focused on, and this is really the future, and this is where we need to remain leaders. And so the question is not whether trade is good or bad. The question is, how do we renegotiate trade agreements to our favor to promote our leadership in this area and therefore promote growth for all going forward?
It would almost be nice to have a national strategy. I mean, we have a number of strategies for intelligence and
Right.
defense and a lot of things.
Right.
It'd be interesting to go through the process, considering the disparate number of views. What is a national strategy for economic growth? Maybe we'll get there after we kind of get through the immediate
current
issues. But
situation.
that would certainly be interesting because other countries have it, although they are smaller and have a lot of
Right.
central planning.
Right. Well, with that, I want to thank both of you for being with us this
Thanks, Lionel.
afternoon and sharing your insights. Please join me in thanking our panelists.
Thank you to our panel. I can read a room. You guys have a 10-minute break. There are M&Ms on the table. Sugar up. We have two panels left to go. I promise they'll be fun. Even audio visual for the next one. So 10-minute break where we're going to be restarting again at 3:30.